Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of our weekly podcast. Global equities trended lower in a volatile week after a global technology outage on Friday disrupted businesses around the world. Major US equity indices ended the week in red, led by tech-heavy Nasdaq Composite Index falling 3.6%. Asian equities remained under pressure, tracked by Taiwan, China onshore, each falling 5% each, and Hong Kong equities, which fell about 3% amid strong outflows from Taiwan and China A northbound shares. Back home, Indian equities rose for the seventh consecutive week. The Nifty index continued to make fresh record highs over the holiday-truncated week, led by positive global cues, strong economic data, a better start to the earnings season, and improvement on monsoon progress. However, the Nifty index spared some gains amid profit booking on Friday. Broader markets underperformed the Nifty index this week, with the Nifty Midcap index falling 2.2%, while the Nifty Smallcap index fell 2.9% for the week. Among sectors, Telecom and IT led the winners with gains of over 2.3%, while energy and capital goods led the losers with cuts of over 1.8% for the week. The Indian fixed income market had a decent week, with government bond yields at the shorter end falling more than the longer end ahead of the budget next week, as investors continue to remain hopeful of a likely reduction in the borrowing plans and Treasury bill issuances. Further, the dovish comments from US Fed Chair Powell also supported a decline in bond yields. The 10-year Indian government bond yield fell 2 basis points to close at 6.97%, while the 3-year and 5-year government bond yields fell 3 bips and 6 bips respectively. The INR depreciated 0.1% against the USD to close at 83.6 per dollar, as the impact of falling crude oil prices and improving foreign investor capital market inflows were dominated by rising US bond yields and strengthening US dollar. INR gold rose 0.5%. Brent crude oil fell marginally for the week to close at $82.6 per barrel, as investors reacted to renewed hopes of a ceasefire in Gaza and a strengthening US dollar, while a stronger than expected US employment claims boosted expectations that the US Fed could start cutting rates again, supporting the outlook for oil demand. Coming to macro updates for the week, the first was on India's merchandise trade deficit, which narrowed to USD 21 billion in June of 2024 compared to USD 23.8 billion deficit recorded in the month of May. Imports rose 5% year-on-year to USD 56.2 billion, the highest on record with the exception of 2022, which was significantly distorted by soaring commodity prices following Russia's invasion of Ukraine. In the meantime, exports grew 2.6% from a year earlier to USD 35.2 billion. The second data was on India's wholesale price inflation, which rose 3.36% year-on-year in the month of June 2024, higher than a 2.6% rise recorded in the previous month. This was the 8th consecutive period of wholesale price inflation and the fastest pace since last February 2023, driven by a faster rise in manufacturing, primary articles and food prices. Primary articles and food index advanced faster, mainly due to higher onion, potato and vegetable prices. Also, manufacturing prices rose more, the second straight month of increase, mainly driven by rises in basic metals and prices of products of wood and cork. At this point, I'll take a pause and thank you as always for listening. If you enjoyed this podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.